Hi, this is Elliot Eisenberg of Graphs and Laughs, here to catch you up to date on the latest residential sales data for both Hillsborough and Pasco counties. And what we're seeing is a continuation of what we've been seeing for the last several months. A slow but steady increase in the amount of single-fam inventory. Multi-fam inventory is probably at its absolute bottom and will probably begin to follow single-fam up. But what we've been seeing for the last several months is a rise in single-fam inventory for both Hillsborough and Pasco counties. If you look at the total amount of inventory units available, they're higher. If you look at months supply of inventory, they're also up. Not up a tremendous amount, but they're up. And the other thing to notice is if you look at year-over-year change in inventory, single-fam, for both Hillsborough and Pasco counties, the differential, it's declining year-over-year, but by smaller and smaller amounts. And I suspect that that trend will continue, and that sometime next year, inventory year-over-year will stop declining and will begin to go up. And then we'll start to see, as I mentioned earlier, multi-fam follow single-fam and inventory start to rise there as well. But inventories remain very, very tight by objective standards. If we look elsewhere, other indicators of the economy, pending sales, they're not going up, they're not going down. They've been range bound now for quite some time. If we look at sale price to original listing price, they've been flat, very high at 100%, but not getting any higher. If we look at closed sales activity on single-fam side in both Hillsborough and Pasco, up just slightly. Multi-fam considerably down 10-20%, probably because of absolutely no inventory on the multi-fam side. This market collectively remains really strong. Look, year-over-year price increases are about 20%, and month-over-month increases continue to go up. So this is a strong market, but we're beginning to see embryonic increases in single-fam inventory, which will be followed by multi-fam. If we change our focus now and look nationally at the economy, what we're seeing in Q3 is weakening GDP. Delta variant certainly hurt GDP, no question. Probably will end up at a disappointing 4.5%. But Q4 GDP should probably be pushed up a little bit because some of the sales activity that didn't occur in Q3 because of the strong Delta variant will be pushed into Q4. That's good. Overall for this year, GDP should still be the best we've had since '84 and probably very, very close to 6% GDP. Really good. If you look at Delta variant, the interesting thing, COVID overall, is vaccination rates continue to rise. We're at about 56%. By the end of the year, we should be at about 65%. And if we include Americans who have contracted COVID-19 but have decided not to get vaccinated, that probably puts us in the low 70%, mid 70 percentiles of total vaccination rates. And that's the lower end of the overall herd immunity thing, right? So this suggests the Delta variant is probably beginning to go into the rearview mirror, which is, of course, really, really good news, assuming a new bad variant doesn't show up. The last thing I want to talk about is interest rates and inflation. Inflation, on the good news, inflation's coming down. The bad news is it's pretty high and it's not coming down fast enough. As a result of these two things, the Fed, in its recent announcement, said, hey, I think we're going to be a little bit more proactive. We're going to begin to taper our purchases of monthly purchases of treasuries and mortgage-backed securities a little sooner than we thought. Not next year, early next year, but late this year. And we'll probably end those purchases the tapering will end probably in July or August rather than September or October of next year, which means the Fed can then raise rates if they have to in late next year rather than early in 2023. The market was pretty happy with this announcement because the market now sees that the Fed is aware of the inflationary things that are going on and is actively going to try and combat them. As a result, interest rates haven't really moved all that much, which is good for the housing market. That's it for now. See you next month.